Welcome to your daily options and futures trade update from Share Navigator. I'm Stephen Cox, CEO and full-time financial trader, and we believe that education is trading power. These updates will show you our real-life options and futures trades, the what, the when, and how we manage these options and futures trades on an ongoing basis. Simply the best way for you to learn. So great news. Today we're going to discuss our crude oil trade. We closed that out last night. Crude oil jumped 3% yesterday and we made a profit of $400 per contract. So we'll discuss that. We'll also discuss what's next for crude oil. And yesterday we put on a short put trade on the S&P 500 and we've already gone into profit on that. We're going to show you that and how we're going to manage that one. And then finally we're going to have a little chat about gold and silver. I'm not a fan of it right now, but if we did get another 5 to 10% correction in gold and silver, there could be some trades that we could line up there. So we'll discuss them in greater detail. So first up, you can see in our positions here, our crude oil short $55 put that was due to expire next week. You can see we closed it out last night and we closed it out for 9 cents basically. And that's led us to a realized profit after all costs of $395. So just if you actually click into the platform here, it will actually break down the trade for you as to when you open it and when you close it. So you can see here in October the 3rd, we sold the $55 put and we took in 49 cents. And last night we closed it for 9 cents. So the net profit was $400 and then minus some of your trading costs. So again, just to reiterate why we love the short put strategy. Remember, that was a trade we put on when oil was at $60. Oil's just gone back to $60, but we've made a $400 profit. And that's because we've sold an insurance premium on crude oil. And it's a higher probability way of you trading crude oil. So just in terms of what's next for crude oil, if we just have a quick look at the chart, you're going to see it's had a nice little jump yesterday. So we're going to just have a little chat about what went on there. So a couple of things have happened in the last few days. You can see nice jump. First things first, the US have said they're going to add 1 million barrels to their strategic reserve. So that's obviously a positive on the supply side. Second, the Russia-US meeting was shelved, and I suppose the anticipation was to be some sort of peace agreement, and then Russia could start selling oil, which would increase supply and reduce price. But obviously that's shelved now, so that's not going to happen. And then yesterday, the US have issued sanctions against two of the biggest producers of oil out of Russia. And they're also going to blacklist countries that actually buy from them as well. So obviously that's supported oil prices. So a lot of going in oil's favor. And again, that's why, we said when oil was getting to the support areas, why we like selling the insurance policies, taking in a bit of profit. So what do we do next? Well, I'd like to see, does this hold? And if we get some sort of a little pullback here, we're going to retreat again or revert to the option trade we just did, except we're actually going to drop the price maybe a little bit lower. We can't do it now because the premiums are too high. So we're going to just have to wait there. So one of two things is going to happen. We're either going to do the $55 put again, and if oil doesn't pull back, if we put that on now, we could roughly put on the exact same trades that we actually had on earlier, that we just closed yesterday. So it'll be the exact same profit and loss dynamics. But, I'd like to see does oil kind of give away some of these gains first. And if they did, we could actually drop our strike down to $50 and generate similar returns with a higher probability of profit. So we wait for that. Next up is our SPY trade. So yesterday we opened up a short put. And again, just to explain to people what we're talking about there. So we basically said with SPY, which is an ETF, by the way, that tracks the S&P 500 for people that don't know, what we said here was, well, look, if SPY, which is currently at 669, if that fell to 640, we would agree to buy the shares. So we're basically insuring somebody else's shares. And the great thing about selling this insurance policy, our probability of profit is extremely high because we make money if the shares go up, if they go sideways, and as long as they don't fall below our break-even price, which in this case was actually at 635. So we've a number of ways out. That's why our probability of profit was so high. So you can see actually we got our timing spot on. We're already up $65 in a day in this trade. We're going to let that trade run. We always do with SPY. We don't tend to close it out too early. And just a fabulous trade in my eyes because you're giving yourself many outs and then it's easily managed, as you know. If we want to roll out and down, if we feel under pressure, we can on that. So we used yesterday's short-term volatility to our advantage. Just looking very briefly here at the probability of profit is 90% in that trade. So, just again, just really, really good, high probability trade. And again, the reason for that is our break even. Look at it, 635.67. Another word, and SPY could fall all the way to 635 before we'd start to lose money. And that's the reason why it's such a high probable trade. And again, look at your profit and loss tables here. If we get to expiry and SPY was actually down 3%, we would still be up $434. Now, by the way, this profit and loss table is based on today's pricing, not yesterday's when we initially placed it. So this is dynamic. So actually for us, it would be $500, by the way. So again, this is the reason why our probability of profit is so high. We just thought we'd highlight that to you. Finally, I'd just like to talk about gold and silver. So I'm actually not going to look at the futures. I'll just look at the ETFs, for example. So let's talk about silver, SLV. So this is the ETF that tracks silver prices. So, we kind of put out a web meeting or a minute last week and said, look, into this this was rising because of the volatility. And we were saying, if you felt the volatility wasn't going to last, sell silver and gold and then look to re-enter. And surely enough, look what's happened since. Now, I'm not a fan here of buying here because actually the support area is a lot lower. So I would like us to get a little bit lower. And as long as silver is still making lower lows, now it hasn't made a new low today yet, right? So we'll have to hold judgment. If it makes a new low today, well, then you don't go near it and buy into the trade until the lower lows have stopped. And we can't say that with any degree of certainty just yet. So for me, just on silver, and it's just my opinion, do I think it'll retest these highs at some stage? Yes, I do. Do I want to enter the trade here? No, I don't. It's just my personal opinion on it. If, however, we did drop below 40, I think then that's a different story. I think the upside return potential warrants the risk. And it's something very similar with gold. Again, I'd stress to people here, just let the lower low see they create a lower low yesterday. Now today gold futures are up today, right? So we mightn't create a new low today, but you got to see this stop, in my opinion, before you create a new position in gold. So again, it wouldn't surprise me if gold retreated all the way down here, and this is the ETF, by the way, to maybe, even down as low as 320, possibly 340 is when we'd look at maybe entering a position there. So that's our view on gold and silver. First things first, if we get into a consolidation pattern here and it stops all of a sudden and starts going sideways for a while, well, then we might consider a trade. But we're definitely going to wait for those lower lows to stop. Okay, folks, that's it from us. So today we're going to stick with that SPY trade. We're just going to let crude oil play out a little bit longer, see that we get some sort of a pullback, and then we're looking with crude oil to put on that short put trade again. But we just want to see, can we get some sort of a pullback in the price first and get a higher premium for our put options? And we're just sitting tight for gold and silver for now. Okay, thanks a bye for now.